In the world of the stock market, there are always going to be the doomsdayers who say that a crash is imminent, that we are headed for a global recession, that the Great Depression of the 1920s will make a recurrence, and people will face pain, devastation as a result. And this is commonplace. This happens all the time. People are skeptical of the markets and don't believe that it can continue to provide prosperity, wealth, and benefits to Americans. But if you just go and look at a chart of the S&P 500 from its inception back in the 1800s until today, you could see that it just continues to climb higher. And what most people don't realize is, in spite of those dips, bear markets, corrections, recessions, global recessions, even the Great Depression of 1929, the market has always recovered. It has always rebounded and come back stronger, better, and provided more wealth, more abundance, more profits than you could even conceive. And in today's video, I want to talk to you about why the market is a tremendous tool for building wealth, why people are afraid of it, and why they are missing out on tremendous opportunities to build wealth, not only for themselves, but for their families and for future generations. Jeremy Hritz here, Courage Pays Better Than Fear Trading, and wanted to put this video together today because a lot of people right now are talking about the AI bubble, which is artificial intelligence, that we are in a period of time where stocks are overvalued. Companies like NVIDIA, Broadcom, Apple, Meta, the big tech companies are valued more than what they are actually worth. And you have people out there like the big short investor, Michael Burry of Scion Capital, who is really doubling down with short positions on companies like NVIDIA and Palantir, saying that the AI bubble is about to pop and that people across the United States are going to lose their wealth. And while there is some merit to what he is saying, there are always two sides to the story. And essentially what Burry is saying is that through sketchy accounting tactics, that these companies are exaggerating the depreciation of the chips that are used in artificial intelligence, and that as a result, their earnings are inflated and the true values of these companies are not being reflected in their prices. And in fact, the prices that these companies are currently trading at are overvalued and are due for a severe and significant correction. And he may be correct. He may be right. But what we also have to keep in mind, again, the chart that I referenced at the outset of this video, is that even despite bear markets, recessions, market corrections, dips, the market always comes back. It always rebounds, and it goes higher and higher. And that's what a lot of people don't understand, is that bear markets, recessions, even depressions are part of the process, the cycle in the stock market. And it's during these times where tremendous opportunity is provided to individuals who are not afraid to buy into the market and be patient. And that's the thing. A lot of people think that you have to trade, that you have to be a day trader in order to profit from the markets. But truly, the best approach is long-term investing, buying and holding. If you just go look at a chart on Apple from its inception, if you would have bought it and held it through the Great Recession of 2008, you could see the profits that you would have generated. There's a saying out there that time in the markets is often better than timing the markets. And so we have to keep that in mind, that any type of drawdown or pullback or correction or bear market isn't permanent. The market is designed to go up. And while we have to be aware of this and understand the risks that accompany investing and that you might go through periods of drawdown, the market always comes back. And the United States, the government has a vested interest in the market because as the market does well, the United States government does well. So they want to protect that. They want to see investment in American companies. And they want to see prosperity for the nation. And so it's really a choice of who are you betting against? Are you betting against the most powerful, greatest nation in the world and the innovation that is created here? Or are you betting against the doomsdayers, the people who say that the United States cannot thrive, they cannot succeed, that this artificial intelligence component is overhyped, that it's exaggerated? Which side do you want to be on? And if you look historically at who has come out the victor every time, it has been American technology, American business, American innovation. And so, while in the short term, the bears may sound smart, they are the contrarians, they present some compelling arguments. At the end of the day, the ultimate winner, the long-term winner, is the stock market. And so we have to keep that in mind when we see all this fear, uncertainty, and doubt that is pumped into the media. It doesn't carry the weight of the charts that speak the truth. It's historical data that you cannot refute because it shows in real time, in hard truth, in hard facts, in statistics, that the market always wins. And so the bearish doomsdayers, the people who are calling for the crashes, in the short term, they may win. And if you go back to the Great Recession of 2008, it took till about 2011 for things to recover. And so, sure, for that period from 08 to 11, the bears were celebrating, they won, but look at where the market is today in comparison to where it was then. The takeaway here is that the stock market always wins. The bulls always win. And so let's say that this crash that people are calling for, that if this AI bubble bursts, is that going to keep down the stock market? Is that going to crush American companies who have built the businesses that make this country thrive? The answer, based on historical data, based on the evidence, is no. And so what can you do? Be invested in the market. Dollar cost average with amounts you can afford to invest and an amount that you can afford to lose. That does not mean to go and put all of your money into the stock market and be careless. It means that when there is fear out there, when prices are dropping, look at it like something going on sale. Americans will look for a great discount on a TV that they could watch and sit and be passive and not create something. But when stocks go on sale, it's fear. Oh my gosh, it's going to zero. But that's just not the truth because stocks are designed to go up. So this video is a call to action. You have a choice. Everyone should learn how to invest in the market. This is your money that we're talking about. And you have a responsibility to yourself and your family to grow your wealth, to ensure that you're in a position to take care of your family, to have prosperity for the generations to come. And again, the U.S. stock market always wins. And so whose side am I on in this? I'll tell you, it's not the bears, because a short-term victory does not mean a lasting championship, because it's always the American bulls, the stock market, who comes out on top. Let me know your thoughts. Do you think that we are headed for a crash? Are we headed for a recession? And do you see that as an opportunity or a reason to run and hide and not invest? I look forward to hearing your comments. Make it a great day, honor the moment, and be grateful.